So you want to learn trading, but you don't know where to start? Well, in this video, I'm going to share with you exactly how you can start from absolutely zero knowledge and get a fundamental understanding of how this journey is going to look like for you. So let's get straight into it. So this is a beginner's guide that I shared with my friends and family and also some of the new traders that have entered my group. And I'm going to share this with you now and just break down what this looks like. So to start off with, we're going to break this down into 4 pairs. So this is strategy, time, what is trading, and the actual analysis as well. So to kick things off, what is trading? Trading is essentially just the buying and selling of currency pairs. So you might have euro paired with USD, and you're basically betting on one going up and one going down. Now you can correlate or trade against all of these pairs. You don't need to know the intricacies of swaps, spreads, and all these things. Essentially, the game of trading is just guessing, is price going from A to B? That's all it is. And you get rewarded for getting that right, and you lose money when you get that wrong. That is literally it. Let's not overcomplicate it, guys. You're just guessing, does price go from point A to point B, and you have an invalidation point. That is it. So, where do you live? We're going to be living your whole career pretty much on what I would say is TradingView. I actually don't know of many other platforms out there, to be honest with you, that are like TradingView, but I highly suggest getting it. So TradingView is a free platform. You can go on tradingview.com, and it gives you basically, this is not a sales pitch, by the way, this is just a tool that you're going to be using. But essentially, this is where you're going to see all the data for all of the currency pairs. When you first go into it, it's going to look this is the downloaded one for the desktop. It's going to look something like this. You basically just want to go create new layout here, and sorry, my internet's being a little bit slow today, but it's going to pop up with this, and you're going to have a bunch of currencies here. You click this plus button and you can search up whichever currencies you want. So for example, if I go Euro GBP, I can get up the chart here and actually see at the bottom here, I can actually see the price of euro versus the pound. Okay, pretty simple. I'm not going to go into depth of a strategy or anything like that right now, but this is where you're going to be learning everything. On the left hand side, you're going to have a toolbar, as you can see to the left here of my screen. This is where you're going to be able to draw lines such as this right here. You've got a Fibonacci tool. You don't need to learn that right now. You've got text, so you can actually write price is going up. And if you click on the small arrows here to the right, just next to it, you can see a bunch of these here. Now, if you click favorite on this, the little star, it's going to add it to your favorites, and this creates a toolbar like this. So this is my personal toolbar. I use this all the time. And here I basically can draw lines, I can write out, and I've got templates here, but I can write here, this is the previous daily low, and basically mark out my chart. So you've probably seen, if you've watched any YouTube videos, loads of people have all these annotations on a chart. This is what it is, all right? You can also get indicators as well up here. I'm not going to go into it right now with this, but basically, as you get a little bit more advanced and you start developing your strategy, you can add indicators to that as well. So that's TradingView and currency pairs. Pretty simple, currency pairs, just to be clear, it's just one currency against another. And this means it's going up, obviously, if it's going up, and the other way if it's going down. Pretty simple stuff. Candlesticks. So what is a candlestick made of? A candle, you're probably looking at this and thinking, what am I looking at on a chart here? What am I looking at? This just looks like foreign language to me. And that's absolutely fine. It did to me as well. A candlestick is this. All right, this is a candlestick. Now, what is this made of? So, when you're looking at a candlestick, you will probably be looking at things in red or green. Red means it's bearish, which means it's going down, and green is it's bullish, which means it's going up. I personally like to have these colors here. You can change it, but basically I've got gray, which is up, and black, which is down. It just works better for me. It means that it removes my emotion when I'm looking at the charts, but that's a whole other story. Anyway, so what is a candlestick made up of? It is made up of the open, which is the lowest point of the square. So you see this square here, right? If I zoom in really zoom in, okay, the lowest point of the square is where price has opened. So in this instance, we're on the monthly. So on the first day of the month, price has opened right here, okay? And at the end of the month, right, at the very end of the month, price has closed here. So you can see the price opened here. You see how it closed here the previous month. It's opened, and at the very last day of the month, closed here. All right, does that make sense? Now, another thing to add is that when you see these wicks, this is what we call a wick here, these lines at the bottom, this means that price has gone to that point. So price has opened, and at some point, it's come down to here, and at some point, it's come up to here. So the same way with the previous month, right? Price is opened here, you see this, opened right here, and it's pushed up to here, but it's also pushed down to here and then closed right here, okay? Now that is a candlestick. That's all you need to know about a candlestick, all right? And what it is that's the monthly time frame. It's the same on the weekly time frame. So these candles don't change, the rules don't change when it comes to a candlestick, all right? This right here is the open, all right? As you can see just here, okay? It's pushed up, okay? It's pushed up here. It's wicked, made a wick at the top, and it's closed just there, okay? So you can see it's pushed up and then closed just there. Now this is going to be like, for the way that I trade, all right, everything is about candlesticks, and I'm not going to get into my strategy, you know, in depth at the moment, but essentially what I look for is, if I think that the candle is going to be bullish, I'm basically waiting for price to open and go lower, and then I buy, and then it comes up, all right? But that's just a little tip into kind of how I trade. So that's pretty much like that in terms of the very, very basics of TradingView, currency pairs, and candlesticks. You can do your own homework and just look at how to use TradingView, for example, look into a little bit more of currency pairs and obviously candlesticks. If you need a little bit more of an explanation, there's loads of videos online. I suggest going on babypips.com and having a look, but yeah, there's loads. So the next thing you want to learn is brokers and prop firms. So obviously this is marking out on a chart. That's all well and good, marking out on a chart, but how do you actually make money in trading? So the way to make money in trading is by using firms. So for example, I don't know if you trade crypto or know much of crypto, but you might use a platform called, for example, like Binance, or if you have stocks or investments, you might use Hargreaves, I always get the name wrong, it's so bad. But anyway, you get the point. You're gonna have a platform where you can buy and sell stuff. So there are lots of brokers, and there's regulated brokers and unregulated brokers. If you're gonna put money into a personal account, always go with a regulated broker. I personally use, for example, like IC Markets. I'm not affiliated with them in any way, but that's who I use to use my personal accounts. And prop firms, all right, are the short for proprietary firms, and they will basically give you capital to trade with if you meet a certain amount of conditions. So if you're new to trading, which you probably are, I'd say probably 90% of the retail space at this moment in time is using prop firms. And how it works is you pay a fee, let's say for $100,000 in capital, you might pay a $500 fee to take the challenge. And what you need to prove is that you need to make 15% on that account. And if you make 15% without losing 10%, then they'll give you $100,000 to trade with, and then they take 20% of the commission. So I can do a whole nother video on prop firms and how that works, but that is essentially probably the best way to get into trading. A lot of people start off with trading and throw money into an account, into a personal account, thinking they're going to get rich, and very quickly they find out that trading is not an easy game, and you're probably going to lose money to start off with. And in my opinion, I think you're guaranteed to lose money to start off with, because it's a professional sport. Like, trading is not an easy game. Like, don't think that you're just going to make money. You might win 1-2 trades, but if you genuinely believe that you have this gift and this natural talent to trade currencies, then you've lost it, because you need to learn this game. There's no natural talent about it. There's talent in ways to learn it, and you might be very, very good in learning, But if you just think you're going to come into the markets and just make money, you've got another thing coming. So the final part of this section, what is trading, is fundamentals. Now, fundamentals is a key factor in price action. You know, it dictates a lot to do with the markets, but for me personally, I don't trade based on fundamentals. I don't wait, for example, to find out how many jobs America has lost, or you know, the unemployment rate, to then make my decision on the trade. That's not how I trade. I'm an intraday trader, so I take about 1 to 5 trades a week, and I don't trade based off news. It can help, and it can help push price in my direction if I'm in a trade, or it can help me for the direction of next week if I see something, news is released, or there's a war somewhere and it's going in one direction, then I'll make my assumptions based on that. But what I would do if you do want to look at the news is go to Forex Factory. And this is probably the best website in my opinion. You can basically see each week's news. And oh, my internet is just terrible today. I'm currently in Indonesia, Bali. And I'll tell you what, the connection is just not good in this villa that I'm at. But anyway, forexfactory.com, and it will share with you all the news that's coming up for the week, and all the historical news as well, so you can see that. So that's really interesting. So let's go and move on to time before I get onto analysis and strategy. So with time, we're getting a little bit technical now. We're not going to get into strategies and stuff like that, but I want to talk to you about the importance of time in several aspects. So we have the higher time frame, the lower time frame, right, and sessions. So the higher time frame, I like to class, and this is what I suggest doing. I don't want to kind of give you half-washy answers. I'm just going to tell you how it is and how I trade and what I think you should do. Okay. Someone else might tell you differently, but I'm just going to tell you how it is in my journey, because I didn't really understand how all of this worked previously, and it would really annoy me when people were wishy-washy with their answers. Just tell me what time frames to look at, and I'll look at them. You know what I'm saying? So anyway, for me personally, I like to stick to the weekly, daily, and 4 hour as my higher time frame. Okay. What that means is I'll look for, and I'll get onto this in a second, but I'm basically looking for structure on the weekly, right? So in this instance, what are we doing? Are we pushing higher or are we pushing lower? Well, for me, I only really need to look at this, all right? I don't like to look back, all of this data, because once you start looking at this, it gets really confusing, all right? A lot of people, they start trading and they're looking at timeframes and they're going, this is the weekly time frame, right? Weekly time frame. So I'm trading on the hour, but like, are we bullish? But wait a minute, we're bearish. And then when I look even further, now I don't even know. Oh, I guess we are, that is going to confuse you as a trader. So in my personal opinion, right, stick to the weekly and just look back, I would say, for a few months. Don't look back years or anything like that. Obviously, if we're at a really key level, then cool, like an all-time high or an all-time low. But really, you just want to be looking at the last few months, okay? Don't worry about anything else. What I like to do is, a lot of my analysis will be on the daily time frame. So I might look, for example, at this imbalance. You don't know what that is yet, but I might look at this as a key level on the daily and be like, cool, when we go into this level, I might look to sell, or I might be buying up until that level. But this is how I formulate my plan. Again, like I said, trading is a lot more intricate than this. And I have my personal strategy that I use. I basically live on the daily time frame, and then I take my entries on the 5 minute and 1 minute. So yeah, if you're interested, obviously you can have a look through my other videos or join my free Telegram or whatever. So those are the higher time frames. The lower time frames, for me, it's debatable. You can say the 4 hours a bit lower, but I like to stick with the hourly, the 15 minute, the 5 minute, and the 1 minute. Now, all of these time frames are all just, they're all inside each other, okay? Let me just wipe it out. But basically, the hourly is this candle here, and inside this hourly, there is obviously 4 15-minute candles, and inside that 15-minute candle, there is 15 1-minute candles, okay? They're all just inside of each other. Again, sounds kind of mad, me saying that, but anyway. So that's all you need to know for now in terms of like what timeframes to look at. You will tend to be, and I suggest not using the 1 minute to make your entries at the start. I would stick to the 15-minute, 5-minute, and the hourly if you're going to enter on stuff. All right. Ideally, the hourly for key levels, and that's what I would suggest. Look at your hourly and 4-hour for key levels, and enter on the 5 and 15-minute. But again, if you're new to trading and you're brand new, you won't know what I mean by that, and that's okay. So don't worry about that right now. All right, don't worry. You're not supposed to know. Just get to grips with TradingView. Start understanding, what is these charts, and I'm going to get onto structure and everything in a second. So we've gone through the high time frame, the lower time frame. High time frame is for just looking at the overall bias, your overall ideas of where price is going. And the lower time frame is more for intraday price action and entries, okay? Now we're going to talk about quickly is sessions. So you have 3 main sessions, which is London session, New York session, and Asia session. So if you're in the UK, those times are, and this is debatable, some people will tell you it's slightly different, but for me, this is what I class the sessions as. I see Asia session as midnight or 10 p.m. Okay, again, it's very debatable. A lot of people say it's midnight until 6 a.m. Sorry, and a lot of people say it starts at 10 p.m. It's kind of up to you, to be honest with you. It's whatever you find, but generally speaking, it's midnight until 8 a.m. Okay, London session is then 8 a.m. until 6 p.m. and New York session starts at 2 p.m. and ends at 8 p.m. Okay, now really you want to be trading around the opens, so you want to be trading at between kind of like around 8 a.m. For London Open, and for New York you want to be trading at around about 2 p.m. as well. And again, I'm not going to get into the strategies or anything like that right now. The whole purpose of this is just so that you start understanding the terminology behind things, TradingView, and you can actually just get a grips of the language that I'll be speaking about and what you're going to hear in this trading journey, okay? But sessions are very, very important. They might just sound like, oh, it's just a time zone, but you're really going to understand that sessions are going to play probably one of the most pivotal roles in your trading journey. Now, a lot of people don't trade Asia. You're going to find that quite a lot. Like a lot of people don't trade Asia session. One, obviously, because it's like Asia times, but 2, it moves the least. So I use an indicator called Asia session range here, and it actually marks out. You can get it here if you go indicators. Just type in Asian session range by Rob Minty. You just click it and it'll come up. And here I can see the session times here, right? See here, I need to actually change the session times, but they're basically in blue boxes and whatnot. And you can see how, it might create a range. It takes the low and then pushes up. It's very interesting how it works. This won't make that much sense to you right now, but trust me, in a year or when you start getting into trading and into the strategy, you're going to start going, ooh, I see what you meant by the sessions. And trust me, you will. All right, cool. So, and just on that as well, just as a bit of free game, Asia tends to consolidate, London tends to manipulate and set the low or high of the day, and New York session tends to be the biggest mover of the day. Okay, so yeah, note that down. That is some free game, but that's going to help you in your journey. So we're going to talk through analysis now. So far in this video, you should have learned what is trading, the very basics, TradingView, currency pairs, candlesticks, fundamentals, briefly, brokers and prop firms, how to actually trade, the higher time frame, which is 4-hour daily and weekly, lower time frame, which is like your 1 minute, 5 minute, 15 minute and hourly, and sessions as well. So London, New York and Asia. So you've got a good fundamental of like what is trading and what is the kind of term, like you can have a conversation about it now, right? So we're going to talk very quickly about analysis, and I don't want to dive too deep into this right now. I just want you to get an understanding of what this is, because I don't want to overcomplicate trading, okay? But the key things you want to learn is market structure, liquidity, and key levels, okay? I'm not in this video. I'm not going to be telling you on how to trade. All right, I've got loads of other videos breaking down my exact strategy. I've got a Discord, Telegram. I've got so much information on that. This is not the video for it. Okay, but if you are starting right now, you have to start studying what is market structure, such as higher highs and lower lows and higher lows. Okay, very quickly, what does that mean in a very short, very kind of like short answer? Is it going up or is it going down? Okay, is it going up or is it going down? Now, if I just zoom in, okay, is price going up or is it going down? I'm not asking you to tell me what happens after here. I'm asking you to tell me what is happening at this moment in time. Is it going up or is it going down? The answer would be going down. Why? Because we're going down, 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 down. Okay, sounds pretty simple, but the concept behind it is just higher highs and lower lows. So lower highs and lower lows. So if we're bearish, which is going down, we want to be making a low, a lower high, low, lower high, right? That is what going down is, all right? Going down isn't going up, all right? Obviously. But you want to look at, if we're bullish and we're going up, then we're going high, 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 low, higher high, higher low, higher high, higher low. Okay, this isn't an advanced video on market structure, but this is just how it generally works. All right, I've got other videos and obviously that talk about this in much more detail, but this is the overall concept of the general concept of if we're going up or if we're going down. Are we making higher highs and higher lows, or lower highs and lower lows, or are we consolidating, which means we're just kind of going nowhere. All right, we're just chopping around, okay? And this is the market you don't want to be in. Trust me, you don't want to be in this market, all right? You want to identify these markets and trade those. So, market structure, that's a very a brief thing, but look, I've got loads of videos on that. You can go into that. Liquidity, that's something that you really want to learn. Liquidity is essentially, right? Liquidity is everywhere, and I hate that answer. I actually hate that answer when people say that to me. I can't stand it. But basically, liquidity is above and below all highs and lows. So you might have a candle, right? You might have price going like this, okay? All right, and liquidity is basically all the highs and all the lows. And what you want to look for is basically, is price taking out some liquidity? So basically, is it manipulating the lows here and then moving back up? And then you know what? Price is manipulated, we can then potentially go in that direction. So that's that is liquidity. But liquidity is also, it's such a strange concept, liquidity, where some people don't even believe in it. But this is something that's just completely changed, so many traders' lives. You're basically looking for manipulations to happen in price. You're looking for manipulations to happen in price, and I'll try and give you an example of it. But let's take, for example, this candle right here. Right, we have taken liquidity, which means we have all the traders that are buying or selling above this high have been taken out, and then we're going to go lower, okay, to go to this liquidity point. Now, I'm not, like I said, I'm not going to go into liquidity in depth right now, but liquidity is what moves the markets. We have to, sorry, I say we, the banks and the massive organizations, they have to take money in order to move the market, okay? So here, this is where they've manipulated price. They've manipulated price to take everybody out here. Imagine you were selling here, right? You were selling here and you've lost now. You've lost all your money and then price has moved. That is how the market moves, and then it moves to its next direction, okay? It's just how the market works. And I've got loads of other videos in more detail, but liquidity, and you don't even need to watch mine. You could go on YouTube right now and type in what is liquidity and you'll learn that. Again, like I said, this isn't a video to go super in depth. Right. And then you've got key levels, okay? Key levels can be order blocks. These can be support and resistance levels. These can be imbalances. These can be breaker blocks. These can be session highs and lows, or daily or weekly highs and lows. These can be 50% of a range, or top and bottom of a range. This is your toolkit to understand How do you put your trade ideas together? Where is the level that I'm waiting for to then look to trade after that? Okay, so key levels. I'm not going to talk about like every key level because there's quite a lot of key levels. But over time, you're going to start understanding what key levels work well for you, and then you start kind of understanding. All right, when it hits my key level, I then have an entry model to take a trade. And that's how trading is. Trading in its shortest form is, I have a key level, I'm waiting for price to get to. Once it gets to that key level, I'm waiting for a reaction. And does my higher time frame analysis, such as the daily, 4 hour or weekly, align with my idea? If it does, and you get your lower time frame confirmation, then you take the trade in that direction, and that's basically it, okay? That is trading literally in its simplest form, okay? In its simplest form. So now the final part that I want to get to is the strategy, all right? So far you've learned about what is trading, you've learned a little bit about time and why time's important, you've learned a little bit about like what is analysis, because the analysis part is, in my opinion, the market structure, liquidity, and key levels is fundamental in any strategy that you go to. Any strategy, you have to understand this. Some people might teach it differently, but you just have to learn this. Like you can't, in my opinion, be a trader without really understanding these to some extent. Okay. The strategy. Do you want to become a swing trader, a scalper, or an intraday trader? Swing trading means that you're taking a position on probably the higher time frame, such as the 4 hour, and holding it for maybe days, weeks, or months. Okay, if you're working a full-time job, maybe some sort of a 9 to 5, or I don't know what hours, learning trading, it might be better for you to learn that. Obviously, it's slower to learn because you've got less trades to take, so less data to learn from. But it can be. A lot of the traders that I know that make a lot of money, their trades are based around swing trading, but they drop to the lower time frame. So you've got swing trading, which is like holding for long periods of time. You've got scalping, which, you know, some people take like 20 trades in a day or 10 trades in a day, just like really quick in and out positions. That's very aggressive, and that requires you to be on the charts a lot. And then there's intraday trading, which is what I do, which means that I take about 1 to 5. I basically take a trade a day. One trade a day. I'm waiting for a key level that a swing trader might wait for, and then I'm looking for lower time frame confirmation in my right time zone, you know, at the right time of day with my lower time frame confirmation, and I'll take that trade in the direction. Okay. So I personally prefer intraday trading. I think that it's very manageable with a job. That's how I started learning. Like, I was obviously, you guys know my background. I was a rapper. I was working 9 to 5. I ended up doing 100 million streams. Started like doing music as a full-time career. Did Reading and Leeds Festival and whatever. And whilst I was in the studio and stuff, I was intraday trading. That's where I was learning a lot of my content. It's the same as you guys. You know, like, you might be in a job right now. You don't have much time, but you can learn outside of work or on your lunch breaks. And intraday trading just worked for my lifestyle. So, 2 final points. Mentorship. So I'm not here to sell you mine. I am biased. I think that obviously because of my track record and all the people that I've helped, but you need to do your due diligence with the mentorship side of things. You know, like if you're new to trading, you probably assume that there's a lot of people scamming out there, which there is. There is a lot of people that are faking results. They're not scamming as such, but they're just not as great as they say they are. And there's also a lot of traders that are great traders, but they don't actually know how to teach properly. And you'll find that quite a lot. You know, you'll see that they're killing it in the markets, and then the way that they teach or what they teach is just not that valuable. So that's kind of up to you on your style. Just try and stay away from the traders that are extremely famous and use social media as a vehicle to not share knowledge, and it's more of a lifestyle. It's hard for me to say because there are a lot of traders that do just flex lifestyle, and they are great traders and they are a great mentor. It's just, you've just got to connect with that person. And the thing is that you're probably going to go through a few mentors. Like, I've done probably about 10 different mentorships. And I'm not saying, don't be out there on your first mentorship, for example, paying like 20k or something. Like, there's people that do that. Don't do that. Like, there's loads of free education online. Even my channel, like, I've got loads of free education online. Start seeing their videos, start seeing how they trade, you know, start understanding the way in which they do things, interact with their community, see, are people actually making money? You know, don't just look at like Google reviews or whatever. Actually, like, do some research in it, and then yeah, and then start to like see if you connect with it, and then if it's right for you, it's right for you. But you have to believe in them, and you have to believe in the strategy as well, like their style of trading. So the mentorship side of things is yeah, it's one of those ones where it's kind of just, I don't know how to explain it. It's just like, it's up to you. It's up to you. What's your style? And yeah, some people, it's just, they choose the lifestyle stuff and they wonder why they get burned. But anyway, journaling. The final part. Journaling is extremely important in trading. It's probably the most important part of your trading. And what is journaling? Journaling is basically, once you have taken a trade, such as this, for example, which you'd mark out. By the way, this is the indicator that you can get here. It's basically the buy and sell. So long position and short position. This would be your entry. This is your stop loss here. And this is your take profit. And this shows where you've entered, where you'd lose, and where you'd take profit. Journaling is all about, after a trade, you screenshot it, you make notes, and you explain to your future self what you did well and what you could have improved on. Now, I've got a full-on journal on Excel that I can send to you. So comment journal in the comments if you would like me to send you my journal template. But this is the most important part of trading. I swear to you, like, if you want to get good at trading, okay, you have to journal. It's a non-negotiable. I don't care what anyone says, it is a non-negotiable. You need to know what you're doing well and what you're not doing well. If you are coming into trading and you do not want to reflect on what you're doing well and what you're not doing well, and actually have studied what you're doing well and what you're not doing well, forget trading now. Log off this video and forget about it. It's important. Ask any top trader, anyone. I'd love for you to find me a trader that is making 5-6 figures a month that is not journaling. You won't find it. I'm telling you now. So forget about it. Don't think you're going to get around it. It's going to happen. And over time, you'll understand that. And if you don't understand it now, you're going to learn the hard way. So learn how to journal properly. And like I said, comment journal in the comments if you want me to send you my template. I personally have 2 journals. So I have a Discord journal, which I basically take screenshots of my trade. So I go to the top right hand corner here and I take a snapshot and I click copy image. Click copy link, sorry. And then I paste that in my Discord. So it's a visual journal. So I can see just like this, how the trades have gone. And then I also have an Excel journal, which is more data specific. So like time, how many pips it moved, the entry model, and just a bunch of different things that I won't get into right now because it won't make sense. But yeah, I'll send you that. Just drop me a comment below. But this is going to be the game changer. You know, like I was losing for 2 years straight, 2 whole years straight, guys. I lost every month, every single month for 2 years straight. I lost. And the only way I was able to improve and get myself out of that losing, I wouldn't say streak, but my losing ways, because my strategy needed to improve, was journaling. I had to just, I'll get onto it in another video, but it was so important for me. Journaling is not some like new phenomenon that's been around. This is just, you know, what you would do if you were an e-com business and you were looking at your data on, you know, the demographic of people that are buying or the demographic of people that are watching the ads. You know, you might be selling, let's say, ice creams to people and you're running ads in Iceland and no one's buying it. And you're like, I don't know why they're not selling. It's like, mate, you're running ads everywhere and half of the budget's going to Iceland when you should be selling it to just in summertime to people in France or Europe, like France, Germany, or the UK in June and July when it's hot. Like, but you only know that because of data. Maybe that was a poor example, but yeah, guys, data is just so important, and trading is all about data. This is data. these candles here, this is data. You know, yes, it looks visual here, but this is just a bunch of numbers that are now in a candle, like it's just given to you in a candle. Like you can even change this into, you know, into lines or whatever you want, but this is just data. All of this is data. So if you're in a game of data, you need to collect that data. So anyway, guys, that's pretty much it for this. I hope that this was insightful. And just to wrap it up, I just want you to understand that, like, I know I talk about trading is hard, and you know, I've just gone through a lot of information that might seem quite overwhelming, but all you need to do is learn these key points to start off with, and you're going to start being able to speak the language and understand the trading space. Okay, there's a lot of jargon, there's a lot of things that people are going to throw out there that it's going to sound so complicated, but if you can kind of like fight through that and like really understand what trading is and simplify it, you're going to have a great time. But like, just know that you're going to need to put in a lot of work. Give yourself anywhere between 1 to 5 years to become profitable. It can take people longer. One of the best traders in the world, Jade Cap, right? You can look him up. Took him 10 years to become profitable. Another great trader, Euro Trader, right? One of my inspirations. He made 2 million in his first few years, lost it all, and then he's made it all back and more, okay? And he's one of the best traders that I've seen, and he's been doing it 15 years. So even though it might take longer, if I told you, you know, let's say in 5 years' time, you could be making 30, 40, 50K a month, right? Would you do it? Yeah, you would. You'd take the shit for now. You would. Same with university. You know, nothing's guaranteed at university. Yeah, I can't guarantee you a good job at the end of your 5-year degree. Let's say you do, you go to uni and you get a master's as well. Nothing's guaranteed. But with trading, if you learn the right way, you stick to what I've told you in terms of the compartments of what to study, okay? Do your homework, watch some of my other videos, they're all free, okay? And yeah, you should be on your way to understanding what trading is, getting stuck in, and figuring out the strategy that is going to work for you. So if you've got any questions, please do let me know in the comments, and make sure you like and subscribe on the video. And yeah, I'll look forward to hearing your feedback. But lots of love, and I hope this video was helpful.